Rick.
Yes, very exciting as we await the February jobs report. And here we go. Non-farm payrolls, 311,000. 311,000. And if you look at manufacturing payrolls, they were down 4,000. 2-month net revision is minus 34,000, minus 34,000. And if you consider the unemployment rate, it moved up to 3.6. 3.6 from 3.4, which happened to have been a 53-year low. If you look at average hourly earnings month to month, 0.2%. Now, if you look at average hourly earnings at 0.2, that is the smallest month-over-month change since February when it was unchanged. If we look at year over year, it is 4.6. 4.6. Now, that indeed is better than a still unrevised 4.4, and 4.4 was the lowest year over year since July of 21. Average work week, 34.5, and we're expecting 34.6, so that is a bit smaller than expected, and last month's 34.7 moved to 34.6. Labor force participation, 62.5. 1/10 better than expected and 1/10 better than the rear view mirror. And 62.5 is the best rate since 62.6 in March of 2020. And if we look at the underemployment rate, or U6, it is 6.8. I do want to point out at the end of last year, this series was at 6.5, which was the lowest since 1994 record keeping. If we look at what's going on, interest rates on 10s are going down. Interest rates on 2s are below 470, and the stock market is gyrating a bit in the Dow futures, but it is moving up a bit. And we need to obviously consider all the flight to safety that has distorted many of these metrics, especially on the Treasury side. And the very simple reason is, you know, we had the biggest punch bowl in world history for many years. Then we had COVID hit, and we threw a bunch of money into the global economy, and specifically the U.S. economy. Banks were flush. They purchased a lot of securities, much more in the securities camp than what they tried to loan out when they were flush with all these deposits. Well, with rates moving up and money markets so competitive, they're losing deposits. And all those securities they have, if they hold them to maturity, they don't have to show the losses from an accounting perspective, although you can find it if you really look at their statements. The point here is, should they need to start liquidating because deposits keep moving away, they're going to end up liquidating securities that were held for sale or to be determined to be held till maturity. If they liquidate those, they have to show the losses, and that's something to pay very close attention to.
Technically, it doesn't really matter how many people are put to work as long as we have people coming in to the workforce to take those jobs. So this is sort of, I think, they're offsetting in the idea that wages were relatively tame in terms of the year-over-year and the month-to-month change. The average hour worked for the week was 34.5, so that came down a little bit. So the net was that average weekly hours were also down year-over-year relative to the prior year-over-year rate. And then you have this surge in participation, which has gone on for 3 months now. We've been ticking up, Carl. So what's I think interesting about this is a cornerstone of what Jeremy Siegel is saying, that if you let wages go up, then you'll bring people back into the workforce. Seems to be the case right now.
That, or there's increasing pain in the economy, right, Steve, where people want to come back and they need to get jobs because the tightening is working. And we're seeing the economy slow. And how about what I said about the fact that now there is some real risk in the financial system? You know, whether there's contagion or not, the Fed's got to be paying attention to what's happening yesterday and today right now with SVB and the fallout. And
it took this to really bring it to the fore. A lot of us out there, and I don't know if David's included in this, we're looking at the different instruments that might be out there that could create systemic risk. The idea of corporate bonds, high yield bonds, some of the private loans that were out there. I don't think anybody was too exercised about this issue, which we knew was out there, the idea that the portfolios had experienced those losses. And again, as you guys said, we're getting information from some of the banking lobbies and stuff, and they're telling us how wonderfully the large banks are capitalized. We have no reason to doubt that. seems to me, Sarah, to be sort of idiosyncratic, which is that this bank got hit coming and going in the sense that they were concentrated in this one area, and the same people that were having trouble and need to withdraw their deposits are the same people. They're also heavily involved in where they put their portfolio, and they got hit that way. So I don't think banks, the other bank or many other banks, are going to have this deposit run, but they are going to have to raise their deposit rates, and that could mean some losses for those banks.
Okay, good people, welcome to Stock Up with Larry Jones. If you're new to the page, I won't be showing my face today. Make sure you hit that like, subscribe, and notification bell. I don't have a WhatsApp or a Telegram. Let's get right into it. As we could see, before we move any further, the VIX is actually going up. Look at this. The VIX is running up, and we're about to hit that 25. So for those of you that are playing the VIX, hopefully you held your positions. This is just another lesson on not panic selling, and hopefully you can recover, not just recover, but make some gains. Okay, so let's look at the Dow. Look at the Dow. It is down 120 at the time of filming this. We will see what closing bell shows us, right? As we got this job data and this bank mess, right? Which we played a video, so you kind of know it's tied in. It is just horrible timing with the jobs report. Okay, so this will probably be the 5th negative week for the Dow. Look at that, just down, down, down. And so we will see what closing bell teaches us. Is this priced in, or will the bloodbath finish today? Down part is it is Friday. And you do know that a lot of times people don't want to run the risk of the weekend and they sell off. What else we have here? We have here SVB. I'm sorry about that. SVB is the stock slid 68% in the pre-market, and they just had to halt the trading because it was moving too quick. The market does have circuit breakers in place. All right. So this is really bad. Silicon Valley is actually causing a run on this bank. They're trying to sell it right now. There's no takers. And this could be an opportunity for big banks, right? I'm not buying any. I'm just not really cool with financials right now. They really haven't performed well with higher interest rates. So, but if you think that you have an opportunity to buy one of the bigger banks, all right, SVB was tied up into loans, not to people, but to businesses, especially tech companies, Silicon Valley, right? When the Fed was printing all of this free money, of course, it was going up. They had a lot of deposits. They were doing a lot of loans. Now there's a run on this bank, and it is absolutely taking the entire banking industry red today on the same day as the job reports. OK, so it's just not good. Remember 2008, that was mortgage and bank induced the recession. All right. So this is, again, not good news. And then we have Biden wanting to tax the rich. Anybody making over $400,000, it'll never pass with a Republican-led Congress. It'll never pass. It's a political ploy. And for those of you that don't know, if you overtax the rich more than you do everybody else, there will be no new jobs created, because the rich are the ones that create the jobs. These are just the truth, good people. I can't stand politics. Let's keep it moving. All right. Before I play this last video, I want you guys that don't know to check the top link below, Stock Up University. It is the cheapest one out there. You don't have to download it if you don't want to, but just go there and check it out. I give step-by-step basics. Josh is teaching a chapter with charting. Keenan is teaching options, and Mommy Trader is aboard now teaching dividend investing. And then Stock Curry does a lesson on basic fundamentals. That'll be the top link below. And so now we will go back and play this last video. So make sure you check out those links, listen to this last video. and we'll see you
breathing
later.
room, and it shows that we're not seeing massive job creation, despite the fact that the headline was really strong, more than 300,000 jobs created again. Beneath the surface, it is a two-part economy. Parts of it that are growing and hiring, and parts that are not. I think between that and the moderating wage growth, and the fact that the unemployment rate ticked up, yes, for good reasons, because of labor participation, Powell has an excuse not to do 50 and to cool it, especially with what's happening in the banking system.
Yeah, not to mention